On the 15th of October 2015, nearly 3 months before Dick Smith collapsed with $400 million in debt, Company Secretary David Cook sent an email to Chief Executive Nick Aboud and Chief Financial Officer Michael Potts querying why the company was holding so much private label stock. Dick Smith AA Battery 40-pack, 141 months cover in Australia. The email read, Dick Smith AAA Battery 30-pack, 131 months cover. That meant, based on sales in the preceding 4 weeks, the electronics retailer was holding enough IA batteries to last nearly 12 years, and enough IAA batteries to last just under 11 years. It had been brought to my attention that we had potential overstocks in these products. Quote, Mr. Cook told a Supreme Court hearing on Monday, where he appeared to answer questions from receivers Ferrier Hodgson over the collapse of the company. Quizzed by barrister Jeremy Giles SC, acting for Ferrier Hodgson, Mr. Cook said he separately queried Mr. Aboud, Mr. Potts and Dick Smith's head of private label, George Papacosta, on the anomaly. Quote, Mr. Aboud said that he would look into it. Quote, Mr. Cook told the hearing. He then came back to me and indicated that the higher levels of stock were in relation to proposed marketing activities in the lead-up to Christmas. Quote, Mr. Potts said something along the lines of, he would look into it. Mr. Papacosta said something along the lines of, the company was in the process of agreeing to sell private label through a new channel, which I wasn't aware of at the time of writing the email. It was around this time that Mr. Cook was responsible for coordinating Project Jerry, described as a company-wide project to drive improved cash flows through the Christmas trading period. In a separate email to the Dick Smith board ahead of a presentation to Macquarie, independent non-executive director Jamie Tomlinson wrote, I have a red flag concern about how we explain the spike in inventory in the $75.75 million adverse cash flow. We're attributing this to a private label inventory build-up. Seems like a lot of private label to me. In response, Mr. Cook wrote there were 2 reasons for the impact on cash. First, increased private label reflecting increased weight in store and desire to drive margin expansion, and timing of buying before the Australian dollar depreciated too far. He wrote, second, timing of buying of branded product. Mr. Cook told the hearing that explanation came from conversations with Mr. Aboud and Mr. Potts, that the company was able to take advantage of opportunities to buy product at attractive prices, either from a currency perspective or from a pricing perspective. In its report into the collapse of the ASX-listed company, Liquidators McGrath-Nicol said Dick Smith's post-float expansion plans went unchecked, and major inventory purchasing decisions meant by early to mid-2015 the company was carrying too much stock that was not saleable and was overvalued. In a letter to former directors and officers of the company, lawyers for Ferrier Hodgson alleged a number of wrongful acts that led to the company's demise, including inflating earnings by deliberately buying too much stock and booking rebates from suppliers as profits. Ferrier Hodgson alleges the directors and officers breached their duties by failing to have proper reporting systems in place to track and manage stock purchases. The Australian Financial Review reported. In his questioning, Mr. Giles pressed Mr. Cook on his recollection of senior management's discussions about sales performance, new store openings, stock levels, the decision to increase Dick Smith's credit line with lenders Westpac and HSBC, and the policy of maximizing so-called over and above A rebates. These O&A rebates, effectively payments the company could earn by meeting certain criteria such as ordering or selling a certain number of units. mostly came back in the form of promotional support. This would then be accounted for as a reduction in marketing expenses, with an excess then booked as a reduction in cost of sales for the month the rebates were negotiated. This was in violation of accounting standards, as it was potentially prior to both the sale of inventory and any receipt of the agreed support. McGrath-Niddle's report highlighted how the company's management team responded to falling sales by making purchasing decisions based on rebates. Poor and declining performance appear to have led to management making decisions on what stock to buy, and at what volumes, based on the rebate attached to the stock, rather than customer demand, the report said. In periods of low profitability, some rebates provided a short-term incentive for management to prefer a certain supplier and product, because the rebate increased profit in the month of purchase, rather than when the product was sold, as ordinarily would be the case. Purchasing decisions increasingly based on rebates ultimately lead to a slowing of inventory turnover rates, as the products are generally less popular with customers. Mr. Cook told the hearing he was not aware of the company having such a policy to maximize rebates between July 2014 and December 2014, and details on how O&A rebates were accounted for were not part of my remit, nor were there discussions at board level regarding the accounting treatment of the rebates. Asked whether there were any controls in place regarding inventory purchases, Mr. Cook said purchasing of inventory was not part of my remit, so I do not have a view. In a bizarre exchange, Mr. Giles referred to a document produced by Mr. Cook for the receivers, which the former company secretary described as a calculation to look at the cash conversion. There is a sentence that runs across the bottom, Mr. Giles said. It says, "Sell private label product bought at 98 cents. Back to the supplier at 78 cents. And rebuy it at 78 cents or even 77 cents. With a risk-related adjustment, reflecting a commercial arm's-length trade would get it into stock at the new rates, generate cash and make a profit." Single quote. What was that about? I don't know, Mr. Cook said. I don't know whether I wrote that line. Do you have any understanding about why selling private label product bought at 98 cents back to a supplier at 78 or even 77 cents would generate cash and make a profit? Quote, Mr. Giles asked. No, Mr. Cook said, referring to notes of a senior management meeting on the 13th of October 2014, which warned of a 7% decline in same-store sales. Mr. Giles quizzed Mr. Cook if there was any discussion about whether it was a good idea to continue opening new stores when comparable sales were down. Mr. Cook said he did not recollect. Quote, the new stores were being opened in areas where there were no Dick Smith stores and in attractive catchment areas. He said, the decision was made by the property team and the CEO. Ferrier Hodgson is questioning the group using powers under Sections 586A and 597B of the Corporations Act. The Australian Securities and Investments Commission is also conducting its own investigation into the collapse. Evidence obtained under oath during the hearings may be used to determine whether there is a case for criminal charges to be brought. Other former Dick Smith staff summoned include former Chief Executive Nick Aboud, who is due to appear in early October, and Chairman Rob Murray, who is also chairman of retail wholesaler Metcash. Anchorage Capital Partners Philip Cave and Bill Wavish, who represented the private equity firm on the Dick Smith board until early last year, would be grilled on the roles. Mr. Cave, who had previously strenuously denied allegations that Anchorage had pulled off a so-called private equity heist, said he would cooperate fully with the receivers. Anchorage bought Dick Smith from Woolworths for $20 million and made $500 million after floating it on the stock exchange 9 months later. Dick Smith collapsed in January with debts of around $400 million, including about $140 million to Westpac and HSBC. The last stores closed at the end of April, with all of the more than 3,300 staff paid their employee entitlements in full. Online retailer Kogan purchased Dick Smith's online business from the receivers earlier this year, with the website relaunching in May. The hearings continue. Frank.Chung at news.com.au. News.com. Our privacy policy includes important information about our collection, use and disclosure of your personal information, including to provide you with targeted content and advertising based on your online activities. It explains that if you do not provide us with information we have requested from you, we may not be able to provide you with the goods and services you require. It also explains how you can access or seek correction of your personal information, how you can complain about a breach of the Australian privacy principles, and how we will deal with a complaint of that nature.